If the folks at Capital Economics are correct, 2020 could be a transition year for the Canadian economy, and it'll be nearly 2 years before the Bank of Canada is in a position to hike interest rates. Stephen Brown is Senior Canada economist at Capital Economics, and he joins us in the studio. Good morning. Good morning. I just said in the break that this might be the most bullish I've seen Capital Economics be on the Canadian economy.
Yes, that's right. It's actually quite an interesting time because, on the one hand, there's been a couple of changes in the last few months that have made us more bullish about prospects for the next 2 years. So one of those is the resurgence of the housing market. That's not something we really saw coming. But it does look like now this year we're going to get a run-up in house prices, and that should help to deflect some of the weakness in the labour market that we're seeing. So consumer spending growth, rather than weaken further as we previously expected, we now think it will be unchanged in 2020. But one of the probably more important changes that we think we've seen a turnaround in investment in the energy sector. So that probably comes as quite a surprise to some listeners. You've heard employment in particular, retail sales in places like Alberta are really suffering at the moment. But in the third quarter, we saw an unusually strong rise in energy sector investment. And we've heard from the pipeline firms that they've been taking measures to boost the capacity of existing pipelines. So if we look at those measures and we combine it with some new rail contracts to come in December and the start of this year, and take into account the fact that last year was 2019 was quite a weak one for oil exports, then in 2020 we could actually see oil exports rise by something like 10 to 15%, which is a really strong number. It would be in line with some of the big rises that we've seen in the last couple of decades, and I think it's something that consensus is probably missing at the moment.
And when we talk about energy in this country, oil and natural gas, what percent of the economy is, and what's the multiplier effect of a stronger energy backdrop?
Yeah, so energy overall is probably around 10 to 15%, but it can be very cyclical. So we've really seen the energy sector weigh on the economy. Really, it's been an energy sector recession for almost 5 years since the oil price crash of 2014, 2015. So even though we're not forecasting a big rebound in energy sector investment to anything like those levels, the fact that we're so low at the moment and the fact that we see oil prices rising from here suggests that even a slight rise in energy sector investment will start giving the economy a boost again after 5 years in which it's weighed on economic growth.
You talked about housing. Most people kind of focus on what's going on with the consumer, debt-laden, the millennials who can't afford housing, the aging baby boomer. How does housing fit into the mix in a strengthening fashion? We've seen prices strengthen, but how does that trickle through the economy, and can anybody afford a home?
That's certainly a problem. As someone who's recently moved to Canada, I'm in the same boat with a lot of people. Prices are very expensive for newcomers in particular, but then a much larger proportion of the population already own a home, whether it's with a mortgage or they own a home outright, and those people are benefiting from a rise in the value of their assets. And we've seen this a lot with people who are retiring. They're able to take equity from their homes and then use that to support their consumption at a higher rate than they would be otherwise. And that effect actually outweighs the negative effect on, say, newcomers who have to spend a bit more of their income to afford a place in Toronto, say.
When you talked about energy exports, what about the non-energy export nature of the Canadian economy, and how does that transition through 2020? And I know your outlook is even further out into 2021.
Yeah, so I think it's really the non-energy part of the economy in terms of exports that we think will continue to struggle. So we've talked about 2020 probably being a good year, but we haven't actually got the data for Q4 2019 yet. And I think that could be a surprise, a negative surprise for markets. We've seen the loonie rise quite a lot in the last few weeks, but we think the data is actually going to deteriorate a bit more in the short term before we see some positive surprises in the second half of 2020. And that's partly the non-energy export story. We've got weak demand from the US. The global backdrop is still, it's maybe recovering a tiny bit, maybe reaching a plateau, but it'll be a while before we see that starting to support economic growth again.
How does the Canada-US trade agreement phase 1 affect demand for Canadian products, in particular for China? I know there's political issues, but it has been a market of focus for Canada, especially on the agricultural side, and it seems to be that the US might be taking that away from us.
Yes, there's been quite a lot of movement with the agricultural exports in the last year. We actually saw a huge rise in agricultural exports this time last year as China sort of banned imports from the US. And then we saw that situation reverse as China set its sights on Canada. It's tough to say, to be honest, where that's going to go. I don't think the signing into law of the new NAFTA, CUSMA, will have too much of an effect on export growth. I think that's really a story about demand. Changing the rules slightly won't affect it too much. But the good news is that agriculture, even though it's very important to some parts of Canada, some provinces, for the economy as a whole, it isn't normally a key driver of growth. So it is one of the reasons that growth has actually softened in the fourth quarter, but it's not something that we're too concerned about driving a further deterioration.
What with the auto sector? Always a big driver of Canadian economy.
Yes, that's another one. Again, that is a much larger driver than, say, agriculture. But we saw, say, the GM strikes in the US. We've already seen that weigh quite heavily on auto exports in October. And that's sort of already they're quite low at the moment. So activity in the sector is quite low. So even though there's some structural issues there, we should get a bounce back starting from, say, November, December, and that will help to drive growth into the first quarter. And that's where we think we'll start to see these positive surprises in the data.
Stephen Brown, thank you very much. It's going to be interesting to see how Canada fares next year.
Yeah, thank you.
Stephen Brown, economist, senior Canada economist at Capital Economics.